Hey, it's Mike with PriceActionTradingSystem.com, and it is Wednesday. It's January 5th. This will be our chart lesson for the day. And as you can tell, I'm getting a little better. Each day I'm feeling a little better. I'm still not 100%. I'm still really weak, but my voice is coming back. I'm feeling better, and so I'll just keep taking it easy. I'm not trading. I just came in for a couple hours this morning and read some emails, put up the mid-morning chart, and then I went back home and I just came back long enough to do this video, and then I'm going back home and continue to rest. So I'm not going to push myself, and but I'm getting stir crazy sitting around the house at the same time. So if I'm feeling good enough, I'm going to do these things until I'm well. So. But I am not trading. I did want to. There was an FOMC meeting minutes released today. Generally, that does not stir the market like an actual FOMC rate announcement does. But you can see this is the box where generally you want to stop trading about noon, and then once the market's kind of back to normal, which this started, at least this did get the market moving. It's the wrong direction, but we don't really care which way the market goes. Only reason I really care that it's going down is I've got other long-term investments that this affects it. So, but it doesn't, as far as day traders, we don't care. As long as we get movement, we can make money. So, when it's doing like this, it's really difficult to know. It's really difficult to trade. Um, if it bounces consistently off this low and turns down consistently off this high, then ranges can be almost gimmies. But that's not happening here, and you can see it can throw you off, and so you got to be really careful trading these kind of ranges. But we do have a nice downtrend here in the afternoon. There's not a lot of trades here, so it's going to make this real easy for me to keep it quick and simple too, because I just can't. There's no way I can do a 30-minute video right now. I'm just not up to it. So my voice can't handle that either, I don't think. But anyway, I wanted to point out a couple of people texted me this morning and said that I needed to reload my chart, that this wasn't correct. I've reloaded it all day long and it has not changed. So evidently that is the historical data for CQG. Whether that's correct or not, I don't know. But that's what they have in the historical database, because I keep reloading it and it keeps coming back the same. So um, since I was not at the desk trading at 8:30, I didn't get to watch it. So any of you that were at your chart watching it could tell me if, for certain if it's correct or not. But several people mentioned it in the comments that I needed to reload my chart, that it didn't load properly. But that's what's coming back, and that's what just I reloaded it right again 20 minutes ago, and that's at a little after 2 o'clock Central Standard Time, and it's still loaded back exactly the same. So I can't get it to go away. So I don't know if that's correct or not. It doesn't really matter. If there were some trades in there, of course we missed them, so I guess it would matter in that sense. But I'm not going to worry about it. I don't even think I marked the first trade till almost 10 o'clock this morning, because there's just not much going on in here. Not great opportunities. So, and again, there's not many trades at all. It's not going to take long to get through this. But generally on FOMC or high volatility announcements, you want to be flat, especially the FOMC stuff. Be flat an hour going into that, and then stay flat until it kind of starts to normalize, and and you can see we've pretty much got a normal trend by this point here. So the blue is pretty much what I would say I'd be careful trading, right? Once we got out of that blue, you're pretty much good to go. So that's what that is. But let me zoom in here. And you can see 7 o'clock comes right in here, and this is just too congested. There's a failed second entry long right here that you might have traded. So you might could have traded that, and there's probably going to be some trades here. Since I'm not watching this real time, I could miss a few things here, and there could be some that are real close that could go either way. Um, you obviously wouldn't want to trade this until it turned back up, but once it broke below there, right below there, that would be a failure. So you may trade that, and if that bar is really real, it must have trapped a lot of people or something. I'm not sure what's going on there. It could just be an error in the data that didn't print right through CQG or something, and it just didn't get saved correctly, or I'm not sure, but that's the way it's loading on my chart. So but anyway, we bounce, come back to the top. You don't really get a setup here again, then you're just chopping along and you're right back up to the top again. There is a lower high here, but that is awfully congested. I'm not crazy about entering there. That's another one that you may take as a lower high, but it's just so congested, I'd skip it. Especially with the fact that you are expecting prices to make a new high. And even here you made, normally I would have said look to possibly get short here, which I would have, but notice what happens. Notice you got a new high and you try to go higher once, twice. So if it turns down, you got a triple test there, but notice how the next bar couldn't break lower, then the next bar couldn't break lower, and then you got congestion, and it just traps people. So if it didn't break lower on this next bar here with that inside stuff, just skip it, because this is what happens to you, and you get stopped out only to see it go right where you thought it was going to go. But I don't see anything in here I like, nothing. There's nothing across there that I would consider trading, and then we break out, and of course it fails, and you may take this trade right here. That's another possibility. There's several of them in here you could argue for to be green or whatever, but I'd prefer to wait on a lower high just to be sure. The problem is it's not that we're probably not going to come back. You almost can guarantee these are going to fail. These breakouts will fail, even if only temporarily. The problem is you have to time them properly, and that's what normally gets people. They try to sneak in too early. So if you wait on a lower high, you got more evidence that we're going lower because you're heading for your second leg down. And you don't get that here. You don't get a lower high till way down here. I mean, technically that's a lower high, but that's not one you want to trade. So no entry there. And then we drop on down, and we're right back in the range again. But you finally do get a first entry, second entry, and you get a little double top here. And it looks like we're going to go lower, and that's a fairly bearish bar, so I like that one. Didn't go very far. Again, we're just the market just has no direction here. There is another second entry short here. If that would have had a good signal bar, I'd said take that short, but that's just too bullish, too neutral to almost too bullish. We drop on down, and then we run up, and it looks like we're going to get a setup here. And again, notice how we start going sideways. And you see, although that looks like that's probably a good opportunity, if you go short there, right into that midline of this little range with all that congestion, it just bounces on you, stops you out, and then goes exactly where you think it's going to go. Same deal. So this timing is everything. So if you see that congestion, you're much better off just to ignore it. Yeah, you'll miss a trade occasionally, but I'd rather miss a trade than enter wait than get burned like that. So just be patient. There'll be a trade eventually. Just wait. Something will come along. And you notice how it finally drops on down, pulls back, and gives you a lower high with a nice bearish bar, and that's a quick, easy move. And again, it doesn't go very far before it's bouncing again. And we do have this green, what looks to be this green channel, that you get a break and a new low, but it just prices are really still stuck in this range at this point. And I think what prices are waiting on is these FOMC minutes to see what's going on in those minutes. So we do drop on down, but you don't really get a chance to trade this. You can see it bouncing off the lows there. It does break through, and this is right before noon, which should be your cutoff time for the FOMC announcement. And the reason is because you don't want to get stuck in this with a trade that you can't get out of, and then all of a sudden the news come and whipsaw you in the wrong direction and stop you out. Which usually, even though prices were going to go lower here, if you were short, you get stopped out before they go short. And a lot of times, even if you're long, they stop you out before it goes long. So you just have to be really careful with this stuff. So it'll whipsaw you in both directions. So I don't see anything I'd want to trade down through here. And then we get into the 12 o'clock hour and you're just waiting. And that's what this is. The market almost quits trading. It's just nothing going on in there. And then it bounces at the news and turns straight down. Boom, there it goes. And then you got this channel and it gets confirmed right here, and you get a little first entry, second entry, but better than that, you got a 1, 2, 3, a triple test here. But I like going short right there when it breaks below. And if it broke below this and turned, I don't know, it could have broke lower and turned up and then went back down. If that was an engulfing bar, you'd want to keep your stop above the last high, which would be here, until this closes, and then move it one tick below that. And then you get a lower high here. We're not really trading the lower high. Mark this one green because I wanted to talk about it. I actually talked about a trade similar to this in the forum today. Even though we tried to go higher here twice, this looks like all one move up. So this really does not look like a failed second entry long, although technically it could be treated as one. An ideal reversal failure will actually trade lower again and then turn up. So you'll have like two legs down that fail to the upside and then it goes lower. So here you really only have one leg down and then one leg up, even though there is a lower high and you get a second entry there. It's not ideal. Again, you would want this lower high here to make a lower low too. It doesn't have to be lower than this one, but it just needs to break lower. Hopefully that makes sense. But it doesn't. So that's just, to me, that's all one move up. It just was struggling to go higher. And so if you wanted, you could trade that as a failure, but it's not ideal. Actually, if we were looking for a reversal, I'd say no way at all. But since we're trying to get back on with the trend, this is a little bit different type of a failure. It's more like a trap. And so you can see this probably did trap some people. And of course, we run down and you try to go higher once, twice. So it's the same exact setup as that right there. It doesn't go lower again. It just tries to go higher twice. And so again, you could trade it the same way. And you actually look like you get two measured legs down here. Actually, you'd probably want to measure this one from right there. And you can see you pretty much get two measured legs down and then it bounces. And you don't want to be looking to buy bounces in a downtrend. Just wait, let prices come back and reset, and you'll probably get a great short again. And of course you do, you get two legs up. Again, there would have been a second entry right here. We're not quite back to the trend line, but it doesn't break lower, so that's a clue. Hey, just wait, and then you get a lower high here, and it doesn't look like it's going to work, but it ends up working out. So you know, if you ride that one out, you got to ride that one out, but it probably was worth riding out. Normally I'd tell you to wait on the failure, which you do get a failure here, but by that time it's just congestion again, and it continues. It ends up going lower, but it would have pushed higher and possibly stopped you out before it went where you were expecting it to go. And there is another failure here. I didn't mark it. Notice there's a new swing high, so you try to go higher once, twice, and it failed. Problem is you got to go, it is right off a key entry point, but generally you want this to be at the EMA, and you also don't want to go short at the low of the day, which that is, unfortunately, by a long shot. So I didn't mark it. If you took it and wanted to be aggressive, and that pretty much did it. There's nothing else today, and I'm really struggling, so 14 minutes is a little bit more than I really wanted to do here. And my voice is, I'm really having to stop this thing every few minutes and clear my throat, and I'm struggling. So I'm not going to beat around the bush. That's what I saw today. And again, there's probably some others you could argue for in here that I may not have marked. So, you know, if you see something you liked and I didn't mark it, doesn't mean necessarily that you were wrong. It just, you know, there might have been some reason I didn't like it or didn't think it was worth taking. So, but that's the way I saw it. I'm going to wrap it up. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.